If you're choosing between Hong Kong Limited and Singapore Pte Ltd for tax, you're probably picking wrong, and here's the 2026 breakdown that fixes it. Here's the problem. Most founders pick based on the wrong tax number. Hong Kong's 16.5% corporate tax only applies to local-sourced income. Singapore taxes worldwide at 17%. Singapore offers 75% tax exemption on first SGD 100K profit. Hong Kong caps at 2 million Hong Kong dollars two-tier relief. You're a SaaS founder with clients in the US and Europe. You incorporate in Hong Kong thinking 16.5% beats Singapore's 17%. But your offshore income stays at 0% in Hong Kong, while Singapore charges 17% on everything, then refunds 75% of the first SGD 100K. In year one with SGD 200K profit, Singapore's effective rate is 8.5%. Hong Kong's is 0% on offshore, but 16.5% the moment you have local clients. Most founders don't model this until tax filing when it's too late. This is exactly why we built Bastion Formations, to walk you through the real 2026 tax math before you file. Most people fail here. They compare headline rates, 16.5% versus 17%, and pick Hong Kong. Do not do this. Hong Kong's territorial system means if you have one local employee, one Hong Kong client, or your director physically works from Hong Kong more than 60 days a year, all your income becomes locally sourced. Singapore taxes everything up front, then gives you the startup exemption. For a company making SGD 200K profit, Singapore's real tax after exemptions is SGD 8.5K. Hong Kong with even 10% local nexus pays 33,000 Hong Kong dollars. That's a SGD 12K difference the wrong direction. Step 2 is model your client base. If 80% of revenue comes from outside Asia and you have zero Hong Kong nexus, meaning no office, no employees, no local sales, Hong Kong wins at 0% on offshore income. But the moment you open a WeWork or hire locally, you flip to 16.5% on everything. Singapore charges 17% minus exemptions from day one, no nexus traps. Bastion Formations sets up your Singapore Pte Ltd from SGD 850 with nominee director, registered office, company secretary, and ACRA filing in one bundle. Step 3 is run the 5-year projection. This is important. In year 1, both look similar. By year 3, when you're at SGD 500K profit, Singapore's effective rate stabilizes at 15.3% after partial exemptions expire. Hong Kong stays at 16.5% unless you structure offshore carefully, which costs 40,000 Hong Kong dollars to 60K per year in tax opinion letters and compliance. Over 5 years, Singapore saves you SGD 18K to 22K even with the higher headline rate because exemptions front-load your savings and compliance is simpler. Bastion Formations handles annual filing, accounting introduction, and ACRA submissions so you never miss a deadline. Here's the problem with the DIY route. Path A is you incorporate in Hong Kong yourself, pay 1,720 Hong Kong dollars to company's registry, then discover you need a Hong Kong tax residency certificate to avoid withholding tax in your client's country. That takes 8 to 12 weeks and costs 6,000 Hong Kong dollars in accountant fees. Path B is Bastion Formations files your Singapore Pte Ltd in 3 to 5 days, bundles your tax residency letter into the first-year accounting package, and you're billing clients with proper treaty protection in under 2 weeks. Here's the exact wording to use when a US client asks why you're invoicing from Singapore instead of Hong Kong. Say this: Singapore has a double tax treaty with the US under Article 7, so you withhold 0% on services income, and I get full tax credit in Singapore. Hong Kong also has a treaty, but US payers often withhold 30% up front because Hong Kong's offshore claim triggers IRS scrutiny. Then I wait 18 months for a refund. That one sentence saves you 30% cash flow pain. Copy it into your invoice terms. If you want to skip all this and let Bastion Formations handle formation, tax residency, and treaty documentation in one go, we do Singapore Pte Ltd from SGD 850 and Hong Kong Limited from 6,500 Hong Kong dollars. both with nominee director and registered office, so you're compliant from day one. Singapore has a double tax treaty with the US under Article 7, so you withhold 0% on services income, and I get full tax credit in Singapore. Hong Kong 0% on offshore, but nexus traps flip you to 16.5%. Singapore 17% minus 75% exemption on first SGD 100K, real rate 8.5% year 1. Bastion Formations sets up your Singapore Pte Ltd from SGD 850. Visit bastionformations.com now. If this saved you from a $12,000 tax mistake, smash like, hit subscribe, and visit Bastion Formations to set up your Singapore Pte Ltd the right way. Visit https://bastionformations.com.